Hello, and welcome to the next of our series of information videos intended to help treasurers and members of the Kirk session feel more able to understand accounts and the associated jargon used by accountants. My name is Jenny Simpson and I'm the Head of Finance and General Treasurer at the Church of Scotland. In today's session, I'm going to look at some of the more basic requirements of the Charity's Statement of Recommended Practice, or SORP. The rules that cover what a set of charity accounts prepared under the accruals basis should look like. We'll be going into some areas in more detail in future videos and focusing on those areas that impact within the congregation of the Church of Scotland. We'll start today by looking at the Trustees' Report, which is the wordy bit at the front of the accounts pack. The SORP sets out quite a lot of detail about what should be included in the report, but the good news is that the requirements are less onerous for smaller charities, which are those charities with income of less than £500,000. The SORP sets the information out under various headings, but you don't have to stick to these headings or even the order they're included in, as long as all of the required content is in there somewhere. The Trustees' Report is a mix of factual information, such as the names of the trustees, and narrative explanations, such as what you actually do to fulfil your charitable purpose. But the SORP requires you to give a balanced view. They want you to say what didn't go very well, as well as setting out your achievements. If you fall into the larger category, you have to give a statement about the risks your charity faces and what actions you've taken to mitigate them. There's a requirement to talk about any uncertainty surrounding the charity's status as a going concern, and I'll talk more about that shortly. And larger charities have to provide details about some of their key policies, such as those on setting the remuneration of key management personnel, on how they award grants, how they choose to invest surplus funds, and their approach to fundraising. Returning to the issue of going concern, it's one of the trustees' key responsibilities to monitor at all times whether the charity is a going concern. And by that we mean, is it able to pay its liabilities as they fall due? Does it have the cash it needs to pay its bills on time? So although there's a requirement to think about it specifically when you're preparing the accounts, it's something you should be bearing in mind throughout the year. A further complication for charities is restricted funds. At any point in time, a charity might hold cash in a restricted fund because it hasn't spent it yet. That cash shouldn't be used to pay unrestricted costs. So when you're looking at your ability to pay the bills, you need to bear in mind that some of the cash you're holding may be restricted and you can't use it without the funder's permission. Returning to the Trustees' Report, although writing it is often seen as a chore, you should actually see it as something positive, an opportunity to share good news about what you've actually achieved, to explain what you'd like to do in the future, and most importantly, to set out the case for why you deserve any funding that you apply for. Let's move on now to the numbers part of the accounts, starting with the Statement of Financial Activities, or SOFA. This records all of the charity's income and expenditure for the year, and everything is split out by the type of fund it is, restricted, unrestricted or endowment, which we've covered in a previous session. The SOFA's format follows the principle of activity-based reporting, so you group income and expenditure by activity, which allows a reader to assess how much various activities cost versus any income they generate. The SORP sets out 3 criteria for when income should be recognised in your SOFA, when you should bring it in with a corresponding debtor on the balance sheet. The criteria are entitlement, probable and measurement, which basically means you're legally entitled to the money, you know you're going to receive it, and you know how much you're going to get. And if you have all of those things, then you bring the income into your accounts. The SORP also covers the opposite situation, where you've received the cash but shouldn't record it as income yet, but rather show it as deferred income on the balance sheet. The rules about when a charity can defer income are quite strict. There has to be what's known as a performance-related condition on the income. This means that you have to do something in order to be entitled to the income. If you haven't performed that thing, then you shouldn't recognise the income. As an example, if you have a concert and sell tickets to get in, then you wouldn't recognise the ticket income until the concert takes place. Income from donations will rarely have a performance condition attached to them. You can't defer the income just because you haven't spent it yet. A performance condition can be in relation to a time period. So, for example, if you receive a grant in advance of the period it relates to, then you can defer the amount that relates to the period after your year end. Another of the basic principles of the SORP is the concept of support costs, and these are the costs of supporting your charitable activities. At one time, we would have called them overhead costs or administrative costs, but those costs aren't well received by donors or funders because people like to pay for the actual charitable work rather than overheads. So now we have support costs. And SORP asks you to apportion your support costs over your activities on a reasonable, justifiable, and consistent basis. The SORP also talks about governance costs, and these are the costs of your constitutional and statutory compliance, or the costs of you being a charity. They aren't administration costs and would include things like independent examiners' fees. When you prepare your accounts, you total all your governance costs and then you treat them as a support cost in their own right and allocate them over your direct activities. Let's move on and have a look at some of the key things the SORP has to say about the notes to the accounts. And here, the SORP requires a number of specific charity-related disclosures, which I've listed here on the slide. Most of them are self-explanatory, but I'll highlight a few things. Firstly, you have to disclose any expenses of trustees, even if they don't claim them. So not only do you need to calculate how much you've paid to trustees, but you also need to ask them how much they could have claimed and haven't. For the disclosure on trustee remuneration, expenses and donations, you have to disclose anything that's happened in the year, but you also have to confirm that there is nothing to disclose if that's the case. That's quite unusual in accounts. Usually, if something doesn't apply, you just ignore it. But Oscars see these areas as so important for charities that they require the negative confirmations if they're appropriate. The requirement to disclose the contribution by volunteers is to provide details that enable a reader to understand what they do for you, what their contribution is. Thankfully, you're not required to calculate a value, which could be quite challenging. And finally, the requirement to disclose related party transactions can be problematic. I've included a summary on the next two slides of who a congregation's related parties are. Not too onerous or surprising on this first slide, you would expect that all of the trustees, all of the members of Kirk Session, would be included in the definition of related parties. But when you get to the second slide, you see how wide it starts to get, because it's also all of these people connected to each member of the Kirk Session who are also included in the definition of a related party. So you can see that each congregation potentially has hundreds of related parties. And on the third slide here, you can see how wide the definition of a close family member is. So it's really important that all members of the Kirk Session are aware of the requirement to disclose any related party transactions, that they're asked to confirm anything that's happened, or to confirm that there is no such transaction to disclose. I've saved the best news to last because finally I wanted to signpost you to a template you can use to help you prepare a set of accounts for your congregation under the charity SORP, and I've included the relevant web address here. Thank you for listening today. I hope you found it useful, and if you have any questions, please don't hesitate to get in touch with Presbytery or with Stewardship and Finance team at 121.